Good morning, everybody. Hello, hello, hello. Joseph, nice to see you. Brenda, you too. So we got some cool stuff to cover today. At the moment, we've got AMC on the chart. As we can see, AMC is having a really nice day. Price is moving up against resistance and broke through its previous resistance already. So we got a nice red hammer candle just because we gapped up. So let's see if we can hold this gap here. But what I have been watching for here on AMC is a sign that we were going to close above this resistance here on this falling wedge, which is part of this larger bull channel. So this is just a little bit of technical analysis for your morning. Coming off of AMC's peak and on the downtrend, this is the resistance line here. Here's our support. And then within that, the most recent trend beginning in mid-September, we had a downtrend that peaked in on the 16th of November at $53.23, and we've been in a downtrend since then. We hit the last time that we were down to this price, we were actually trading back in May of 19, the 19th of May. And this was right about the time that AMC's OBV started doing some really interesting things. So let's go remind ourselves of the history that we had seen on AMC's OBV. If you notice, I charted out some things in order to give myself a little bit better visibility into their OBV. So this is the interesting stuff that I wanted to point out. And as we're looking at this downtrend here, this was AMC's on balance volume from early November of 2020, and it had these couple of peaks here where the OBV had maxed itself out at 230 million shares on balance, and the price went into this bull channel downtrend for the next several months. And when it hit its all-time low, it was, let's see, the 4th of January, and that was the low on the OBV. The price actually hit its lowest point, same day. But shortly after that, the OBV broke up and through this channel, and then kept going. And notice that the price didn't move all that much. It only went from a low of $1.91 up to a high of $3.20. Granted, that's a 100% move, but with the price being that low on the stock, it really wasn't that big of a move, especially considering that it had been trading at $8, $7 for most of 2020. Going further, by the time that it was trading at $4.70, on balance volume was up to 900 million. And the following day it was up to 1.36 billion. And then the following day, when it squeezed all the way to its high of $20.36, the OBV was 2.615 billion. So that's a significant jump going from a negative balance of 280, we'll say, million shares up to a peak of 3 billion at the OBV's peak. At the price peak, it was 2.6 billion. So what I've noticed is that these downtrends or these consolidations of the price seem to match up with the OBV's consolidation, where the OBV is more or less flat. And this was the first and only real downtrend of OBV that we had seen in AMC's history. See, here we had created more of a wedge, and I'm not the most experienced technical analyst, but when I look at this consolidation, or at least it looks like consolidation if we were looking at a price chart, the on balance volume for AMC just seems to wiggle in this consolidation channel with a narrowing wedge that finally terminated on about the 28th of May. And what I found interesting was that there was this same breakdown. And after that breakdown, when the price hit its lowest point, at the low of 893. Then it immediately broke up and through that wedge, and that began the price consolidating for about 1.5 trading weeks through to May 21st. And I believe it was on May 25th or May 26th that I had called the squeeze based on the gamma ramp and all those options going in the money and things of that nature. We were already trading with the price closing at $16.41 on that particular day. And at this point, the OBV is more than doubled. It's back up above 3.6 million on balance. We'll say just an estimate, just under it, and kept going. Now I'm looking at AMC's most recent OBV. Here we had another wedge. It looks very, very similar. Might adjust this just a little bit. Here we have the same thing. We have another wedge, and we have this huge breakdown. Okay, the price had been falling for a long time now. We normally would see the OBV moving with the price, but in this case, we did not really have that kind of activity. The price continued falling, but the OBV remained flat. And if you remember from our earlier discussion, when we see an OBV that's just flat or consolidating, it usually indicates that an algorithm is being used to push the price down to attack the bid, force the price to drop consistently in a way that is predictable and, dare we say, manipulated in an effort to get a better price on the stock. And each time this bounced off of the bottom of this wedge, we saw kind of a rubber band effect where it bounced back up and the price challenged previous resistance again almost immediately. And what I find very interesting is that now we've broken down and the price hit its lowest point. Price was all the way down to a low of $14.40. We haven't been here for more than 8 months now. Sorry, 7 months. 7 months. And immediately after that, we rubber banded, snapped straight back through this wedge. At this point, I'm looking at this data as though it is a signal of what's to come for AMC. A lot of FUD and a lot of negativity have been circulating around AMC stock, all the meme stocks, and many others. There's GameStop, of course. There's BBBY, BlackBerry. We can go on for a while. Each of these stocks that we have looked at in the past have shown very similar behavior on their charts. So if we look at BlackBerry, and that huge peaks and then consolidation on the OBV while the price sells off, and then as soon as there's a pop in the OBV, you get this nice big hill. Then there's another run, and then same thing again. OBV is perfectly flat, and then as soon as the OBV starts to curl upward, like the BB is actually like a better example. It's a more perfect example, I'll say, because as soon as the OBV goes up like this, I mean the price was trading. That's a 15% increase in price. Like it's nice, but it's not a squeeze. And the OBV curling like this was a definite sign that it was turning a corner. Notice that the on balance volume went from 3.45 billion all the way to a massive peak of 4.8 billion, more than a billion, more than 1.5 billion shares on balance. So that was quite a significant spike. And we can look at other ones like Senseonics, Progenity also does it. Yep, here's Senseonics chart. This one's another good example. So you notice that the OBV is not far off from where it was trading before, even though the price is trading much higher than this. Look at Progenity. Progenity is doing the same thing. Had these big hills, and then pay attention to this price. Like this price over here is about $1 down here, and now the OBV after we had peaked it at our top with the OBV going all the way up to 2 billion at the peak price. OBV all the way over here, 1.66 billion. So we've only sold off by about 340 million shares on balance, but the price is all the way back down to $1 at its worst point. Well, not quite $1, but close enough, right? So Like all these trends, they're very interesting. They show some very interesting patterns, and that's why I'm pointing this out, because these algorithms that are working with these stocks that are using this that are using this technique do have a give. Like, they do have limits, and they do have signs, they do have tells. And the one thing that's in common between them is that there is a supply and demand factor. And I don't think that any amount of market manipulation is able to get around that same fact, that there is a basic supply and demand principle that's in play. If there are not enough shares available to buy, then they cannot just come up with them out of thin air. Yes, market makers can naked short, but they also have to provide liquidity for these. They have to find brokers that are willing to back up these phantom shares in some way, and there are limits to that. It costs somebody money. At the end of the day, somebody has to post up some collateral. There has to be some cash coming from somewhere in order to take on this risk. It doesn't just come out of nowhere. Now, AMC has had the most significant sell off from, let's see, we'll mark the high at $45.95. Just say $46 for the sake of round numbers. At our worst trading price, the low was $13.40, and the OBV was all the way down to 4.3. We'll say 4.39 billion shares on balance, and now the price is immediately rubber banded up. So I'm considering this to be a signal, and I'm waiting for that OBV to break. The reason why is because if we were to chart this same pattern out here, so let's imagine that we were trading AMC all the way back from January, and we had followed it through all of this turmoil. We were charting out until April, late April, early May, like first week of May. And we had drawn this wedge, and suddenly we had a breakdown. And this was actually the worst panic of AMC's chart, because we had finally seen some serious green candles, and then for the next solid 3 trading weeks, we were trading down below $10 again, and this was the worst price that everybody's seen for quite a while. The A movement was pretty well under full swing, and at that point, when the OBV went to its lowest point, notice this big dip here, and then as soon as we started curling around again, we broke straight through that, and it did not take the price to move much. So that's what I'm looking for. That's what I'm looking for. And I've already opened up my position back up into AMC with everything that I've got, because I see this trend, and I'm I'm getting paid here in a couple of days, so there's more money coming to throw into this. But right now, with AMC moving like this, and the OBV providing me these signals for me to I guess a way to put it would be to solidify my convictions. I'm expecting AMC's OBV, and this is the trigger that I'm watching for. I'm not caring about the price right now. I'm not worried about it taking off without me, because I know that the shares on balance have to go first. They have to. I'm waiting for the algorithms to make their buy in. And when they do this, they're going to try to do it quickly so that they can get ahead of all the other traders. This is either going to be shorts covering, or it's, I think that it has a lot to do with shorts covering, but I'm not certain that it's because of naked shorting. I think that what it really is algorithms are using shorts in order to sell off the price at strategic moments in time. Notice that the sell offs, if you look historically on AMC's chart in the intraday, the price always sells off during low volume hours. That's a technique that's well documented in stock market manipulation, is that during low volume hours, that is the easiest time to push the price down, because there is a wider bid ask spread, because there's fewer traders trading on that particular stock, and in general within the market. And because of those low volume hours, they're able to attack the bid very quickly. And then if they are able to do it quickly enough, then other algorithms will jump on the bandwagon, and they will start shorting the stock based on technical trading and technical indicators in order to push it down. But after they have exceeded their limit, I think that in order to continue to operate on the stock, the algorithms have to restore their supply of shares. They have to cover some of those shorts. They have to get some of that supply back. So at some point, they have to there's going to be dips and there's going to be swings, and you notice that like as soon as the sell off is like let's take this perfect this U right here, or this downtrend right here, just this spot between mid September and mid October. We were trading at $52.79, and the OBV is dropping. Watch the OBV and the price. It's dropping slightly, right? And at that point, the volume is the volume is decreasing at this point, and fewer people are interested in trading the stock. But as soon as it hits its lowest point, then the volume spikes and the price goes up by about 7%. And the OBV is restored to about a quarter of where it had been before. And then the OBV continues rising throughout the next trading week until it finally gets back to pretty close to where it was at this peak price back here at $52. But the price stays down below 43 is what it closed at. I have a feeling that this is part of the algorithm's game, is that they're trying to push the price down during low volume and then bring volume back into the stock so that more people are day trading it. They can get better fills and they can restore that supply. And then later on, as they're reaccumulating the shares again, they repeat this process, reaccumulate the shares, and then they're able to short it down heavily again and push the price down even further, then recover those shares back again at a preferred price without lifting the price so much that they actually end up hurting themselves. And that's all part of that. That's all part of that market manipulation technique with algorithms and computerized trading, taking an advantage of over retail traders and the fact that we just can't move and think as quickly as a computer can. And that is not all. I'm going to show you one more thing that I noticed, and I wanted to thank Cat Moores for entertaining this little thought experiment that I had come up with. I mapped out these timelines, we'll say, these rectangles. I apologize, my cat won't shut the hell up. Sir, 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 relax. Sorry about that. So these timelines that I'm looking at here are drawn specifically between the peaks of the squeezes. This one begins at the peak price after I notice the OBV entering a big downtrend, because I feel like this is consistently a giveaway when there's accumulation and distribution happening in a particular stock. So I drew this channel, and I drew this time. I'm going to let my cat out. I can't stand listening to him just scream all day. Apologize. Cats are not very considerate creatures. Back to what I was saying. These timelines that I've drawn are between the peaks of these big price moves. This one starts here at the peak price where the OBV hit its highest point, and I drew it to the peak of the squeeze because I feel like it's significant, right? And then I did the same thing, just peak of the squeeze to the next peak, and now I've drawn another one just based on the OBV trend, and if I were to stack these, so these are our timelines, okay? So keep in mind that these are just timelines, date time ranges between the peaks in price on AMC's chart alone. And if I lay them side by side one another, this date time range from the most recent peak till the top of the second peak is very close to doubling the timeline. This was just from mid-November to the end of January. And then this was from the end of January till the first week of June. And then this one is from that point, June 2nd or June 3rd, until sometime in the future. That's that's what I'm basing this on, is that the timelines are essentially doubling or slightly more than doubling between the peaks of the squeezes. And I cannot help but notice these patterns where the OBV is spiking up through its previous trends and the price is rebounding very quickly. There's not a lot of time between where we're currently at now and our next earnings, which I find significant. I have a feeling that our next earnings season is going to be big for AMC, especially with the success that they had in the first quarter of, or I'm sorry, the fourth quarter of 2021. So they're going to be doing their Q4 results here with this upcoming earnings call on the 1st of March. I believe this is the 1st of March, isn't it? 3rd of March, excuse me. So like this is as tinfoil hat as as technical trading can possibly get. But I just can't help it. Like I'm looking at these patterns and they're just so consistent and they mirror each other so well. Let's just watch what happens. Right now, the OBV sold off really badly, and the last time that happened on AMC, where the OBV finally broke down below I mean, what can only be described as a wedge. The last time that it broke below, it rubber banded back through, and then there was a huge spike immediately after that. So I'm going to look for that spike. And right now, I'm trading around, I'm trading a couple months out just to give myself plenty of time. But I'm going to look for this. I'm going to look for when AMC is about ready to cross this threshold. And then I'm gonna do something stupid, and I'm gonna go ahead and I'm gonna buy some more calls and shares with the theory in mind that this is the last chance I'm gonna get to get my AMC shares at a preferred price. Y'all call me crazy if you want to. You can heckle me for throwing out a bunch of hopium, but let's just watch what happens, okay?